Hi everyone, and welcome back. In our last few videos, we've been tracking the ghost of the 1970s. We've looked at the technical breakout of gold, the looming puppet Fed, and the distribution patterns that suggest equities are losing their crown. But today, we need to zoom out even further. We need to talk about the exorbitant privilege. For over 80 years, the US dollar has been the undisputed king of the world. It's the water in which global trade swims. But there is a fundamental law in economics that says this reign cannot last forever. It's a paradox that was predicted back in 1960, and right now, in early 2026, we are watching it reach its breaking point. It's called Triffin's Dilemma. And today, I'll show you why the very thing that made America rich is exactly what is now ensuring the dollar's decline. To understand where we are going, we have to look at where we've been. History is a graveyard of global reserve currencies. Before the dollar, it was the British pound. Before that, the Dutch guilder. And before that, the Spanish real. Each one followed the same arc: a rise to dominance through trade and military might, a period of absolute hegemony, and then a slow, painful debasement. The pattern is always the same. The empire starts spending more than it earns. It takes on massive debt to maintain its global reach. And eventually, the rest of the world realizes that the paper king has no clothes. The US dollar entered this cycle in 1944 at Bretton Woods. But unlike the gold-backed currencies of the past, the dollar since 1971 has been backed by one thing: trust. And that trust is being tested by an impossible mathematical trap. In 1960, an economist named Robert Triffin stood before Congress and told them something they didn't want to hear. He explained that as the issuer of the world's reserve currency, the US faces a conflict of interest. On one hand, to keep global trade moving, the US must supply the world with dollars. How do you do that? By running constant trade deficits. You buy goods from the world, and you send them paper in return. On the other hand, if you run these deficits forever, your debt explodes. Eventually, the world starts to doubt your ability to pay it back. That is the dilemma. To be the world's leader, you must weaken your own balance sheet. You are forced to choose between global stability and your own long-term fiscal health. For decades, people ignored Triffin. But look at the numbers today. US national debt has just crossed the $38 trillion mark. The trade deficit is chronic. The US had to cover around $1.2 trillion in interest expense in 2025 alone. We have reached the stage where the international demand for dollars is being replaced by international fear of the dollar's debt load. The 30-year bond market is painting a clear picture. Even though we are in a cutting cycle, bond yields are not going down. They are moving sideways at best. At the same time, the dollar weakens substantially against other currencies. Investors are increasingly skeptical of the US government's fiscal health. The global East has been dumping the dollar for over a decade now. The BRICS nations, led by China, Russia, and India, are actively building the infrastructure to bypass the dollar. Whether it's the BRICS pay system or the recent proposal to link digital currencies for trade, the goal is clear: alternative liquidity. Remember, the dollar's strength comes from the fact that you need it to buy oil or settle trade. If that need vanishes, the trillions of dollars held abroad come flooding back home. This is what economists call the dollar overhang. If central banks decide they'd rather hold gold than a politicized, debt-ridden dollar, we see exactly what we are seeing right now: central banks buying gold at the fastest pace in history. They are sniffing out the end of the Triffin cycle. If you watched my last video on the next Fed chair, you know why this matters now. If the next Fed chair is a political appointee who prioritizes low rates to fund the deficit, they are essentially choosing to default via inflation. They are telling the world, we will solve Triffin's dilemma by making the dollar worth less. When the Dutch guilder lost its status in the 1780s, it didn't happen overnight. It happened because the Bank of Amsterdam became insolvent after funding too many wars. When the British pound lost its status after World War II, it was because the debt burden became unsustainable. In 2026, the US is at that same crossroads. The end of a reserve currency isn't usually a day of a crash. It's a decade of decay. These processes happen gradually, and then suddenly. It's the shift from a world where everyone wants your currency to a world where everyone is looking for an exit. This is why gold isn't just an investment right now. It's an asset that doesn't have a Triffin dilemma. It has no counterparty risk, and it cannot be printed by a puppet federation. And while personally I believe that Bitcoin will inherit this role in the future, I have to be realistic and admit we are not there yet. This is a process of its own, and it's going to take decades. But that is a topic for another video. As I always say, trade the market you see, not the market you want. And the market I see is one that is slowly realizing the exorbitant privilege is becoming an exorbitant burden. What do you think? Can the dollar survive another decade of $2 trillion deficits, or are we witnessing the final stages of the Triffin endgame? Let me know your thoughts in the comments. If you found this deep dive into monetary history helpful, please leave a like and subscribe. We are going to keep digging into these macro roadmaps as the 2026 transition unfolds. Thanks for watching, and I'll see you in the next one.